Good morning, everybody. Hope everybody is doing very well today. Welcome to our first Founders Funding Couch event. We're pretty used to having and operating events more live. So this will be our first event that we have run, I guess, from the comfort of our homes in over 4.5 years. So it's quite fascinating. But when we first started OPN, we started with running our events just like this, running them through a platform online where we brought guests, startups to speak with senior level execs from corporations, and that's how we connected people. So it's very exciting that 4 years later, or 5 years later, we're now connecting to the same way we started. So the unfortunate circumstances, but we're excited to be here today and working with all of you. So we'll jump right into it. Thank you very much for joining us today. We're very excited for our first Funding Couch event, but also excited to be able to connect with all of the startups and community leaders that are joining us today. We'll be running these events every week. We've been looking at the date and time, and we feel that Monday morning to start the week off right would be a great opportunity for us to join with the startup community. So Mondays it will be, and we look forward to seeing you guys again. So just a little bit of background and stats around what we do and how we operate. OPN has been around since 2016. We've conducted over 65 live events. We've had, I guess our exciting part to what we do is that we get to connect all over the world, and we've helped a lot of startups receive funding in that process, and that's always exciting for what we do. We've built lots of partnerships, and we've had the mayor come to our event multiple times, and I think there's a lot of great stats you can see here, the things that really make us who we are when we're integrated in with the community. Some of these most of these companies have all pitched at some point in time throughout our 66 events, and we'll continue to run our events, and now we'll be making them more blended with having bringing into the live component, as well as running them face-to-face when we're able to do that, and hopefully in May or June. So next week, as you mentioned, we have an event on the Monday, April 6th, and then our next one will be a digital event again, which will be April 14th. And then we have our Skip the Line event, which will be taking place on May 11th. So a little bit about how we function and how we operate. So we're partnered with multiple groups from Seneca College, Durham, in the Durham region, with the university and college there as well, and we're connected with Seneca College. So UIT, Seneca College, and YSpace are three of our partners, and we're also connected with the City of Toronto. And what we do is we put together programs that allow for startups to get face time in front of angel investors, and predominantly in front of our angel investors, which are LPs in our fund. And what we do for that is that we want to provide a way to give feedback to all the startups when they're going through their cycle to pitch and get better at pitching. So we wanted to provide a platform that allowed for those to occur. So in saying that, our process is that you'll submit to the website at opn.ninja to request to want to pitch. And from there, we set up a time to work with you to get you ready for angel investing. And how we do that is we work one-on-one to provide you with the necessities on the fundamentals of how to pitch, but also on how your business should look and what you're trying to do in order to get investors interested in your business. And then we start practice pitching in front of these groups at the 3 colleges and universities. And then from there, we go to Skip the Line. And Skip the Line was created as a way to speed up the process to syndicate for all of the startups at one time. So in the room, we have 6 angel groups present on the screening committee, and they screen the 10 companies, which is a 7-minute pitch with 10 minutes of Q&A. And then from there, we have the panel choose the best companies that will pitch to go forward. And they'll pitch at our event, which is usually takes place at Toronto City Hall, where we have 2 companies pitch, a panel, a keynote, and a large showcase of 20 plus startups for the 300 plus people that attend, so that you can optimize your time in getting in front of the right people. And then from there, we created a fund called the Supporters Fund, where we invest in a couple of those companies that work their way through, that we're able to get behind, that we feel from our mandate on how we work on the fund, that we're able to invest. So the Supporters Fund, this is our second fund. It's a $5 million fund, and we've made multiple investments in our previous, of course, and we continue to make investments today. As I mentioned, Skip the Line is a paid event where we have 6 screening angel groups with 10 startups that pitch, with a 7 minutes pitch and a 10 minutes of Q&A. And you're required to have a full DD folder with all the information required in order for you to go through and pitch. For some stuff that we're doing to take some of the content that we've provided over the years, we provide an online course that you can review and go through, and you can see here for the information. So feel free to take a screenshot or reach out to us and we can share that information with you as well. We've had lots of great sponsors over the years that have helped us with everything that we've done, and we've listed a few of them here. From the City of Toronto, Startup Toronto, Miller Thompson, Flow Water, Mindful, System Bind, Vibe Tea, and of course, our software company, Hardboot, and our fund, the Supporters Fund. We'd like to announce our newest member of our fund, which is Jeff Champagne, and he will be speaking on a panel today as well. And he is come on as a GP into the fund, so we're excited to have him. We have Laura, who is our GM, and hopefully everybody's had a point to touch base with Laura. And of course, the rest of the team, which is Brian, Mike, and Philip, who all help to generate and help us grow and build within the community of the startup community in Toronto and Canada. For myself, if you're interested to connect, feel free to add me on LinkedIn. Be more than happy to chat from there. And you can also find on the opm.ninja website under /team is a calendar where you can book any of us, including myself, to do a review and learn a bit more about your business. So today we're going to have a fantastic, amazing lady out of the United States, which everybody is always interested and excited to hear what they're doing in the financial space and how they're overcoming these barriers. Anastasia Green, and then we'll do a panel on fears and challenges that are going on currently. And then we'll take some quick questions that you guys can post in the chat section. So just before we have Anastasia jump in, I would also like to announce that we're pretty excited that last week or on Friday, we finalized an offer and an investment into Scout, which is a fantastic new startup that is coming out of Canada, and that we were excited and happy to join in with these guys, with Adam and team, and we look forward to a lot of success out of them as well. So I just wanted to share that throughout this, that we continue to work hard and invest in the companies where we can, and we look forward to learning more about you and your companies. So without further ado, I'm going to have Anastasia jump in. Now let's see if I can transition this. Okay, Anastasia, you should be able to throw up.
I'm muted. Yes. Hello. Hi, everybody. Thank you, Jeffrey. Okay, I feel like this your talk was missing applause option. Every
Oh
time.
my. Oh,
I was like, we just need that feedback loop somehow implemented in Zoom sessions as well as in live gatherings. Yay! I see some applause in the chat. Amazing. Give a round to Jeffrey. Good morning, good evening, wherever you are, guys. Please feel free to drop messages, comments in the chat for speakers. It's that feedback that we all need to understand if you are getting what we're saying, or we need to stop a little bit more about what we're speaking about. So I'm gonna have, my name is Anastasia. I'm originally from Ukraine. I've been in Los Angeles and in California for the past 5 years. In the past year, I've been running an investment bank. Before that, I was an entrepreneur, running tech startups back in Ukraine and in Silicon Valley, raised rounds, sold one of my startups, and switched to the VC side. What we do now, we help entrepreneurs to close rounds. B, we deal source for several family offices and funds in the United States, and as well help entrepreneurs with a very similar mission. What guys here do is to understand how fundraising works, how you guys can be more successful in what you're doing. So today, let me share my screen. Here we go. 1 second. Today, I'm gonna try to make a short and sweet talk for you. We're gonna be precise and drop your comments if you have any questions. I will address them after everything will be answered. Okay. Yeah, seems like you can see it. Since the name of our panel today is fears and challenges, I decided to give you hopes and dreams of today's environment and just share our perspective of where do we see opportunities and where you might, what tactics and strategies you might use to align and navigate your startup through this interesting time that we will be seeing in the next few years. So I will, let's see, yep, okay. I will address 3 main questions that most of our founders that we talk to come to us and they ask. So you're gonna get the answers that I'm usually giving by this time. And again, all these answers are always being researched and refined, but that's what we think at the moment, me and my business partners. And that's where we think the market will be going. Again, not a prediction, not a financial advice in any case, just our opinion based on our experience and experience of our advisors around us. And I'm gonna give you a story. Before we jump into questions, I will share a little story with you. So let's start with that. Okay, here we go. The story based on real events. It was happening in the middle of 90s in Armenia. If you don't know about Armenia, it's the gorgeous country full of steep mountains. And in 90s, the economy was broke down, tear down in pieces. People were extremely poor. And there was this monastery on top of the mountain that also had several small villages around this monastery. And the people in the villages were poor in a as it is in third world countries, and especially after the Soviet Union breaking down, it was really tough situation there. So the story takes in the time after the winter when the road to this monastery up to the hill to these villages was completely destroyed, and the people of the villages were asking to fix the road because the only way for them to get supplies from the city to the village was basically by going up and down of this road. And then there was an entrepreneur, local, let's call him entrepreneur, local Armenian guy who came and said, we're not gonna fix the road now, we're gonna focus on building funicular. And people of the village were like, well, but we don't really need the funicular. We just need the road to go up and down the hill. But entrepreneur was so excited and he decided to take more time, fix the road temporarily, but still spend investment on building the funicular. So long story short, years later, until this day, because of this funicular, the city and the villages on top of the mountain are getting thousands of tourists every day because it's one of the most mesmerizing rides in the world on that funicular. And the tourist stream is feeding the entire village and all the families that live in that village. So the lesson of the story is, when we're in a time of crisis, how can we find people who can think long term and build not just the quick fix, but also the infrastructure that will help to thrive and bring growth for the years ahead? That's the question I would like you guys to ponder upon today. And let's go into the questions that our founders usually ask us. So what are the industries that will grow in this current environment? Those are not all of them, but I would say those are the 3 ones that we're very sure about. And I'm gonna explain why we are betting on these specific industries. First one is, well, first of all, one of the things that changed a lot in the current and changing in the current environment, A, we're getting a lot of government support towards certain industries, and B, the consumer behavior changes. And if you look into the health tech is going to be massively supported by the government. That's one thing. It's going to allow startups that require a lot of capital to go longer run than just having the VC funding. And the industry that was resisting the change for such a long time, especially in the United States, it's one of the largest and the most outdated industries that we do have here. Healthcare is extremely expensive. It's extremely hard to implement something, especially on the level of med tech. So now we have this opportunity when the government will be more open. It's going to be faster to pass certain regulations. And the consumers became so aware that there should be a need in the healthcare, there should be a change in the healthcare system, that adoption will be much higher. And when I'm talking about health tech, I'm including med tech, robotics, telehealth, digital health. So it's a broad industry. And even now, we already can see spikes, especially in the telehealth industry, where doctors are taking patients remotely, where everything that's going to empower remote prediction, data-driven, and even remote operation of certain actions that are done by doctors in the hospitals, startups in those areas will have much better chances to get capital and to get market adoption. Fintech is the second large and highly resistant change in the past years industry. And again, I'm talking about United States. But now we're in this amazing time in the world where consumers are becoming germs aware, and they're choosing to make their financial operations online over the phone using their mobile app. And that massive consumer group that was using banks and going to ATMs now is shifting to digital payments. And again, there is a lot of data proving that consumers, the growth of the digital payments is going up. And it's a great time for fintech startups to look into how they optimize the transactions between peer-to-peer transactions, business transactions, and there is just so much opportunity in this space, in this area. Food tech, again, the current challenge with logistics of food, the cross-border logistics are pushing the industry to change and to grow. Even if you look into statistics or stats of the Farmstat, the company that allows you to buy groceries online, their demand grew 70% just in the past month. Consumers that never bought groceries online right now are making this choice and realizing how convenient it is. And we're predicting that even after this shift, even after the lockdown will be over, we will see a lot of consumers who will stick to buying groceries online. Another big sub-industry in food tech that's going to be growing, in our opinion, is ghost kitchens, dark kitchens. Is because, again, our market right now has to shut down a lot of the restaurants and bars, and all of them have to adapt. and now they have to try the services that allow them to deliver, allow them to have a pickup, allow them to shrink down their cost to minimum and survive through these times. So any technology, any startup supporting that niche will have customers right now. So I would like to look at the opportunities short term and long term. And again, as I told you in the story about the funicular, fix the road and also build the funicular that's gonna allow the growth. And that's the strategy you can apply in your startup, especially if you're working around these industries. The next question, okay, is what investors will look for. And I'm sure we're gonna discuss more during the panel, but what we are seeing already that's happening on the market, during any recession or crisis, the investment on the angel side is always shrinking down much more than the later stages. So if you're running a startup of the early stage, the criteria that you will have to meet, especially to get angel funding, will be much higher, meaning that you will require much stronger traction that you would require not in a crisis times. And another thing, it's also more related to especially Silicon Valley startups that are so used to big budgets and burning money fast. What we are looking for and what our partners are looking for as investors and startups at the moment is much more lean budgets than it was before. We want to see that you guys will survive for a long term without the additional need for capital. Another thing, especially that applies to the SaaS companies, there is a higher preference on a VC side for the long-term SaaS contracts, which obviously decreasing the risk of the investment and knowing that your company will have long-term contracts that will allow you, again, go for a longer time and survive and have a cash flow. And last but not least is the stress management skills. Every founder has to have it. And I can see now that investors are looking to experience of founders being able to manage themselves and the teams in a stressful times. And the last question is how to survive and thrive. As you saw, the investment strategy of SoftBank is changing. And if before it was all about hyper growth, let give you access to unlimited capital, now everything is shifting more towards lean growth. How can you grow organically? How can you grow sustainably? How can you drive revenue first and then grow step by step, month to month on the long run? Another thing I would highly advise, we do expect the decrease in the VC investment in the next few years, maybe 2-3 years, as it was in a Great Recession. The Great Recession VC market dropped 30%, which is, again, it didn't stop, but it shrank. So right now, as we still have a lot of dry powder capital left in VC funds and angel groups, you guys still have an opportunity to take on that funding window, that opportunity, that funding train, and still get the capital in the next, let's say, 5 to 10 months, when nothing critical still happened in terms of the capital. We still have the capital on the market. You still have access to it. Don't let it go. Don't get distracted by noise. A lot of opinions, a lot of advice, a lot of people who are coming up with theories of the economies going down. Try to focus on what you're doing and don't jump on short-term trends. You know, everybody around, like in Los Angeles, I have at least 5 e-commerce entrepreneurs that are jumped fully on selling face masks, and now they have oversupply and nobody wants to buy it because they have too high price. You know, trends like that, opportunities like that might work out, but might take you away from your main course. And as Ray Dalio says, again, can't empathize it more, read the Ray Dalio book, Build Machines, bring people and build processes that will allow you to go through any crisis and any recession, if it happens, And whatever happens, you will have that machine that has ability to process what's happening and take you to the next level. That's it. My name is Anastasia. Here is my email. Feel free to shoot me questions. And we're in this beautiful time where our roads are broken after the winter, and we can create beautiful funicular that might change our world, make it more green, make it more equal, more sustainable in terms of cash flow, more sustainable, and in terms of the products, more sustainable. I wish you guys the best, and if you have any questions, shoot me a note.
Anastasia, thank you very much. That was awesome. Huge applause for you and for that talk. I think that resonated very well, not only in the United States, but wholeheartedly in Canada as well. We were faced with the same obstacles, and I think the investor community is looking at it from the same perspective of the types of communities and businesses that you want to invest in, and what's going to be hot and what's going to get investors excited. So thank you. That was fantastic. And I love the analogy of the roads. That was good. Okay, so now we're going to jump into our panel. So give me a second just to activate everybody. I'd first like to introduce Jeff Champagne. Jeff, is that you? Are you there?
Yeah, I'm here. Good morning, everyone.
Awesome. And I'm going to bring in Angelo.
Good morning, everyone. How's everyone doing?
Everybody's good. We'll respond for the group. As Anastasia mentioned, it does feel weird when you're talking and you're waiting for that background happening. So we're all applauding all around. So I think that's a great start. So okay, so why don't we jump right into it? And I think the first question that I'd like to jump into with, and I know we shared you guys with a list of questions, but I think that I wanted to touch base on Anastasia's comment around the types of investments that investors are looking for, and to jump into that category. Maybe Anastasia, you can start this off. But when you're looking at these companies that are coming in, I've been getting a lot of questions on, are investors really ready to invest right now? Are they putting everything on hold until the dust settles? And what would that look like? Is there a time frame for that? So I'm curious on the US side, and then we can jump in on the Canadian side for that.
What I'm seeing now, deals are still happening, especially when it's a no-brainer deal, with the strong team, strong traction, and the industry is the industry that we think will feel good. So the deals are still happening. One thing that I noticed changing, that investors often take a little bit more time, because a lot of them are reevaluating their strategy at the moment, and they are saying, yes, we are investing, but we also need a little bit more time because we're helping our current portfolio to adjust the strategy for the next year.
Okay, good point. Angelo, did you want to jump in on that?
Sure. So my perspective, I'm closing 4 deals right now where I'm leading the DD, and there has been some pullback by some of the investors, but I'm also reassured that some new investors have jumped to the plate and participate in a couple of the opportunities that I'm closing. So yes, I do see some effect of our current situation and the impact it's having from an individual's portfolio as the market shrunk like 30%. So that is occurring, but I think that's more the exception as opposed to the rule. I think people that are committed to long-term growth, as Anastasia mentioned, are still jumping in.
And Jeff, how are you finding it as well on your end?
Well, I think from my own experience, what I'm seeing with handling a few deals through our small angel group, and then also working with you on our VC fund, I'm finding, I guess, basically two different scenarios. From an individual angel investor scenario, I think it's going to be a huge pullback for a while, and that's on multiple fronts. I think it's because a lot of people, because the whole angel community is still relatively new, so a lot of people have done a lot of investments. We're looking for exits and not seeing them, and I think the current economic situation is going to further delay a few of the exits that people were looking for. I think angel investors have seen decreases, obviously, on the market in their own personal net worth. I think angel investors have to look at, most of them are business owners, and they're going to have to see when this, throughout and when this crisis emerges, how much effect, it's going to have on their business. They're going to need to dedicate more time, more resources, whatever. Is it going to require funds that, maybe they had available before that now we're going to have to be reinvested in their company? I think they've got to deal with, potential family members that, are unemployed and may need some financial assistance, whatever. So I think individual angel investors, from what I'm seeing, are definitely pulling back. Now, that doesn't mean, there's still some that, are better situated than others. And I think the superstar deals are still always going to get funded. As Anastasia was saying earlier, I think, that's always the case. The superstars will go ahead, but I think the ones that are marginal, I think you're right. I think they're going to have to prove that you've got a more sustainable cash flow. You're going to have to prove that, you're recession-proof, that, you've got all these plans in place to weather a downturn that you necessarily, weren't going to be expected to provide, even a month ago. But yeah, like I say, just from what I'm seeing, it's going to be a lot harder within the individual angel groups to get people's money out of their pocket for the little while. But contrary on the venture capital side, I think because, these funds, a lot of them have cash available and are always looking for the good deals or the angels in the rough, I think it's probably, it might be a little harder to get money from angel investors right now. It may be a little easier to get money from venture capital funds because, that's how people make their living in their returns, and they're going to be looking to utilize that extra cash. And, now there may be things where, they're trying to, negotiate down the valuations or, take bigger ownerships or, whatever that may be. So the startup may not get quite as desirable terms as perhaps they were hoping for in the start. But I think that they'll see perhaps some better opportunities with VC firms going forward for the short term. That's what I'm seeing. Like I say, we'll see how it plays out.
For sure. Well, I appreciate that, Jeff. And so you made a point, one of your comments, and I think that it would be something that we could jump into as well, is that there might be a change in valuations. There might be an opportunity for investors to look at the market a little differently. Angelo, you made a comment that you're working on 4 deals right now. Are you finding that there's pushback because of the situation and the environment, and that you are seeing companies look at creating a better opportunity for investors so that they can move forward quicker? Are people told to stick to their guns? What are you seeing there?
I see a bit of both. The real challenge is when tranches of money have already been put into an opportunity at a particular valuation, the entrepreneur is really stuck between a rock and a hard place, right? They can't really lower their valuation without ticking off all of the existing investors that have gone in. Having said that, what I'm looking at right now in a lot of the opportunities is more about the long game. And my big question right now is, all right, if we close this round at your amount, what runway does it give you? Because the marketplace is going to take a while to rebound. And does this investment give you enough runway to be there once the market turns around and reestablish all of the supply chain that's required to actually book business and, more importantly, deliver the solutions to their customer base. So yes, I'm seeing investors that are trying to jump into opportunities, trying to maximize the value of their investment, which would be pushing down the valuation. But there are some limitations that entrepreneurs are able to adjust. And in one case, I did see a slight decrease in the valuation, around 10%, which seemed to be a real carrot. And it actually brought in 2 new investors.
Okay, no, that sounds great. And Anastasia, on your end, how are you seeing any changes in that side of deals that are coming in? And we know that the U.S. tends to be, in all things, they buy high and everything different than Canada, or most countries in the world. Are you seeing that their opportunities are changing, or everybody's sticking to their guns there as well?
I would say that, I mean, obviously on the entrepreneur side, they are trying to stick to their guns. And one of the deals we saw that was able to keep the same valuation that they had in December during the fund, actually even beginning of January, is to bring on board person that was building business through the previous recession. And to the invest and offer and show the strategy that seemed tangible for the next years. So that was one of the strategies, one of the moves that allowed to not decrease valuation. But on the investor side, yes, it's definitely the conversations. We're hearing these conversations every day that, you know, guys, 2 months ago, it would be reasonable. Now it's just too high.
And that's a good point, and I think that actually helped answer Kalita's question, where she was saying, how do you stress test on the management side? And I think that's a perfect way into that, is that teams are going to have to be a little bit more reactive in this case, but they're going to have to go deep and have to figure out, where can I strengthen the bench, and then how do I show that the bench has got the strength to take to get through this. And it's not always going to be about financials. It's going to be about the team and making sure that you have the right team behind you. So that's great.
I just wanted to add a little bit to that question. How can you show investors that you have stress management skills besides the strategy and the team you're bringing to go through this period? Also, things that you can do is to things that you can show is the way you're managing your current team. How are you going through layoffs if you have to go through layoffs? How are you managing the consumer base? Because your consumers will be stressed right now as well. So all the strategies you're applying to solve these issues are good indicators for investors that you know what you're doing and you know what to do if the things will get worse.
No, that's very well put. And I think I want to pick up on one of those, one of the pieces that you mentioned there was where you may have to lay off people, or you have to shift your business or pivot. I think this is probably a big component for startups right now, is with the current environment, people are trying to understand, what should I do? And I think the last thing people want to do is to have to lay people off, or to have to change or shift their business model. What do you guys recommend? And maybe Jeff, you can take a sec on this one, but what do you recommend founders do in order to maintain their business as usual, but be able to survive the moment that we're going through right now?
Well, I think you basically need to have 2 business plans. I think you need to have a best case scenario, and I think you have to have a worst case scenario, because the biggest problem is that, you know, this is sort of unprecedented. We've had, you know, as for those of us that are a little older and have been around through, you know, 2 or 3 big recessions, it's been a little more predictable, simply because, you know, you're able to see, you know, finances, like you start to see the market coming down, you know, there's government tools. You know, we've never seen a big shutdown like this, so we don't know what's going to come out of this. You know, I think that opportunities like, you know, fintech, for example, are probably going to be less interrupted in normal operations than some of the other food or software or, what I'll call just sort of the general services and general goods market, because, we don't know what's going to happen. We don't know, how many business and personal bankruptcies this is going to cause. We don't know how much the market could still drop and decimate people's investment portfolios. We don't know, they're calling potentially an unemployment rate of 15%, by the summer for Canada. So it's really going to be hard to see. So that's what I would do, is I would have a best case and a worst case business plan, and you're probably going to end up working somewhere in the middle. You've got to certainly have a little extra cash on hand. I think if you were looking to hire, 3 full-time headcount employees, you might want to just do 2 and see if you can make some adjustments on that. You're going to have to look at, alternate sources of funding. Everything's going to have 2 or 3 scenarios. What if people need to work from home? What if we need to have office space? What if this bank calls this loan? Or, hey, what if we're given extra money? What if we find a great deal where people give us extra money? Then what can we do? I think people are going to have to be prepared perhaps to have a bigger marketing budget, than what they initially planned, because, you're going to have to get the name out there. People are going to be a little more in their shells. So, whatever your marketing space is going to have to be, you're going to have to work a little bit harder, come up with either a bigger spend or some better creative ideas. That's how I see it, and that would be my advice, is just really, really make sure. I think, as an entrepreneur as well, very few of us plan for failure or plan for worst case scenarios. Nobody's going to plan for failure, of course. But like I say, I just think that you're going to have for every major decision you're making, if I do this, what's my worst case and what's my best case? Because we just don't know what the next 6 months are going to look like. And, obviously the goal here is to have, everybody surviving at the end of it and thriving. And, I think if you plan for some extra hiccups along the way, whether it be, like I say, financial, whether it be personnel, whether it be space, whether it be, IT stuff, whatever those be, as long as you've planned for it, I think the chances that, thriving at the end of it are going to be that much greater.
I think it's probably key to say that as an entrepreneur, you need to start looking at kind of drawing a line in the sand and figuring out what you're going to do to keep yourself relevant, sustainable, and ensuring you have cash flow. And sometimes you're going to have to make those tough decisions, and you can't look at what big companies are doing. You have to look at being in the smaller space. What do I need to do to survive at least another month or 2 before I can start getting a position? Angela, what are you seeing with some of the investment side? Are you getting, are startups looking at downsizing, or are they looking just to find extra cash where they can? What are people doing in order to keep moving forward?
Well, I'm glad you asked me this, because I see it firsthand with these deals that I'm closing. And in all cases, they're taking advantage of the government's incentives of supporting up to 75% of an employee's salary. So this is huge for small and medium-sized companies. And as they go through this best case, worst case scenario, as Jeff described. So that's one thing. Look at sources of funding that's available in this extreme situation that we're in right now, and leverage all sources of support, particularly non-dilutive support that exists there. Government is right now very open to letting companies access resources that typically may not have been available previously, but the current situation is critical for government to enable companies to access these resources. And the one thing that I would always ask a company is, let's look at a scenario. And typically I say 24 months, but maybe that is shortened given the current situation. Assume that you fail. What are the reasons that led to your failure? and how can you work around those particular factors. And it's really important and telling what the companies themselves see as critical barriers to their success, and how they need to plan to overcome those particular obstacles. So I think that it goes back to Anastasia, stress testing the management skills. And it's not only on managing the business, but also making sure that the continuity in terms of growth is maintained, and what areas need to be strengthened to maintain that continuity in its growth trajectory.
So you mentioned something there that I think both you and Jeff mentioned, that it sounds pretty strategic right now, which is putting together this plan and being able to understand where this plan is going to take you. I'm not sure, the way I like to kind of associate this is that everything for me is, if I'm going to fail tomorrow if I don't do this today. And that's how I've always had to put this red alert on. So we share a 15 and 30-day plans. So right now, because you're in a stress mode, everything has to be shortened. So your 90-day plan is now a 15-day plan, and that's your survival plan. Anastasia, how do you feel that companies will adapt to being able to make these changes? That they're not forward thinking that I got to be ready for 6 months out, but I got a plan for the next 15 days and I can turn that into a 30-day, but I need to be reactive and I need to do things quickly. Do you feel that this is appropriate, or do you think, again, it's business as usual, or do you think it's more of a benefit to investors to see that these companies are shifting and they're making the right changes and they're being quick about it?
You know, I would say that maybe one of the best things I saw in startups, in startup founding teams, it's when there are two different people with two different skill sets, and one is extremely fast, lean, and creative. And you know, like when you have the Formula One pilot, you have the pilot that's making those shifts every second, and then you have the second pilot. Forgot the name, sorry, I'm bad at this. But he is knowing the long-term strategy, and they know all the turns that's going to be coming in a way. And the same, if you look at the startup team, you either need to have both skills in you as the CEO, and you have to be able to do those adjustments on the way and just short, quick sprints and short, quick experiments. And then you have to be able to plan, as Jeff and Angela mentioned, such a great points. You need to have that 3, 4, 5 different plans and scenarios, how you're gonna play out in the long term. So you can do that either yourself or try to bring somebody, advisor, investor, anybody, a friend, who can help you strategize in that long-term run.
And I love the point that you mentioned, is bring the advisor in. I really want to emphasize on this, that you're in a 15-day plan, 30-day plan, you're really being lean and you've changed things around. This is the perfect time to lean on your investors. Are you guys leanable? Are you guys looking for this? Do you want to be part of these teams? Or are you looking from the outside saying, give me a plan and execute it? How much touch points do advisors, mentors, investors really provide these early stage companies? And to add into that, can you give one recommendation on what you believe someone that's starting a company up today or tomorrow, what they should focus on? Angelo, why don't you jump on that one?
Oh, I have to think about it, but I come across this every day, and invariably, startups, very early stage startups, have an amazing mindset on creating a novel solution to a particular problem. The challenge that they face is getting the actual market feedback to determine whether their perception of the pain point is consistent with the marketplace. So I always would encourage especially earlier stage companies, to get that validation from at least the perspective of, yes, this is a pain point that the marketplace is looking to have solved, and whether it's the changes in the entire dynamics, for, as Anastasia mentioned, online commerce now, given our current situation, how does that really affect the financial institutions, food delivery? All of these solutions are actually really directed by the marketplace. Is this marketplace going to want this solved, and is it sustainable long term? From an investor point of view, I try and ensure that our investments that go into a company have my involvement in some fashion. The one that I'm closing on right now, I've been granted to be on their board and provide intimate feedback on their direction as a director in their company, and also providing advisory services. So those two things are key, where investors can actually share their experience, both the highs and the lows, and more importantly, a lot of the lows, and what to look out for. So I think that's critical. And again, their business should be focused on a clear market opportunity that exists, that's validated.
Perfect. Thank you, Angelo. Anastasia, how about yourself? Are you getting involved? And what's the thing you would recommend for someone to start up a company today, what they should focus on in order to get into the market?
Yes, we do get involved a lot, and it's been a strategy all the time this way, because I guess the reason is because all of us are coming from entrepreneurial backgrounds, and we're all just keen to get into the startup and help out hands-on. And when the Corona was just starting, this madness was just starting, we sent email to all of our portfolio companies, current customers, partners, saying that we see this happening in the market. That's what we recommend you guys to do. If you want our advice, please just book our time and let's have a conversation about your startup. And we actually had like call after the call, just working out ideas and strategies, how they can operate in at least next 6 months, or I mean, you can't really predict 6 months, but at least you can brainstorm some ideas what you can do. And it's, in my opinion, it's such a great opportunity for startups to reach out to their investors and advisors, as you mentioned, Jeffrey, and take advantage of their knowledge and their expertise, and at least have that second opinion on your plans and your strategy. And regarding the second part of the question is which skills founders need to have in order to start business right now. I 100% agree with Angelo that you need to be able to prove market fit as fast, as cheap as possible. And I would say it's been this way all the time. Just now it's became so much more critical. If before current situation, investors would look into startups that are more visionary, space moonshot. Now it's really down to the numbers and your ability to stay cash flow positive.
Oh, that's great. Thank you very much, and fantastic. I think we may have lost Jeff. I think he might have.
No, I'm here.
Oh, you're there. I saw the number go. I thought you dropped off. Why don't you, just because we're almost at time, Jeff, so maybe you can just jump in and real quick throw those in there, the same two questions, please.
I think more than ever before, what startups really need, two things. Basically, one, I think they have to be more funded, because I think, the option, everybody's going for different trenches and different options, and, the money has been flowing for the last, 3 to 5 years. And I'm not saying it's been easy to come by, but it's been easier to come by. And I think, nobody knows how quickly and how easily you're going to be able to get the next stage of funding once you've run through, what you've got in the bank. And everybody knows that's been there that the number one thing that can kill a business is running out of cash flow. And I'm dealing with some, companies that I invested in, 3 and 4 years ago through angel rounds that are, starting, before this problem occurred, they were running into cash flow problems and their long-term viability was starting to look uncertain. Well, now, with this, I'm trying to stay involved with them, almost on a daily basis to make sure they have the cash flow to keep going, because, we've put, some of us angel investors have put a lot of money into them, and, we want to, make sure that they have the funds to keep going. Which leads to my second point, and that is, I think more than ever before, these people need to make sure they have an incredibly strong advisory board, because they're going to be able to draw upon people's vast and diversified experience. Everybody's going to have a different expertise. It's like they always say, I'm an engineer by profession, right? And I've been in manufacturing through various capacities for 30 years. And in manufacturing, when times are good, you want an engineer running your company. And when times are bad, you want an accountant running your company. And in manufacturing, that holds true all the time, believe me. So I think, with startups, what you want is you want to have, a very diversified and extensive advisory board, so that, you've got people on there that can, keep the marketing ideas coming, that can keep the financial ideas coming, keep the, the IT ideas coming and going from that respect. So, those are the two things where I think, these new startups have to really shore up and, make sure you've got the money and make sure you've got the brain power, because most of these, especially, advisory board members are usually a little bit older. They're usually, experienced, and most of them have seen now, like I said, earlier, and we've all said, this is a little unprecedented these times. So we're all not going to really be able to say, what it's going to look like when we come out on the other side. But for the most part, there's a fair amount of experience available to help weather if you just want to lump the term as a storm, most people have weathered storms before, and I think that experience and that advice is now going to be more valuable than ever before.
No, that was perfect, and much appreciated, Jeff. I think to summarize kind of a few of these pieces is that I think a lot of the same theories still hold true, is that even though we're in a crunch time, you still need to prepare your business by going through and making sure that you're MVPing it, that you're being cost effective, that you're bringing in the best brain power, you're getting the most people to support your product. And all this comes down to de-risk your business as much as you possibly can. And I really have to emphasize the de-risking, and the de-risking is going to be the different. You may not be financially in the right place. You might not have revenues. There were some questions that were geared around areas, in the health and sciences. Are people going to be interested to invest in these types of companies? And then what position do they need to be in order to get the support? Again, it goes back down to, which is de-risking your business. Everywhere that you can find a problem and a solution, it's how well you created that solution and how many people you can get interested. And I think when you're coming to the interest standpoint, research, find out other investors that have invested in space that you're in. That's going to be helpful, because they're going to be attracted to you quite quickly, because they're going to understand the problem you're solving. Find people that have worked in big business in the same space that you may in, and reach out to them, especially if they're retired or switched into a different space. You can utilize them as a sounding board. You can get a lot of valuable information from them. So I think a lot of things that are going to happen now is it's going to be really heavily focused on team, how well that team can help you execute and solve that problem. And hopefully at that point, if you're just starting a company, you don't have to pay everybody in large sums of money to help and grow your business. That can all come at a later stage, but that you're able to bring in the right people. So outside of that, I would love to keep talking. I'm sure we could turn this into an all-day panel and all-day discussion on how to work in the communities that we're in. But I want to thank Anastasia for your valuable keynote and helping us better understand the landscape of North America and in the world. So applaud, because I don't know if there should be an applaud button. I'm going to invent one, but I think that's awesome. So thank you very much. I'm applauding you. You did a fantastic job. Thank you. And to the panel, Angelo, Jeff, thank you very much, guys, for joining in today. You guys were fantastic. A lot of great insights. And there were a bunch of different questions that have been posted. And I think we've touched on most of those throughout the questions that we did have. And if there's anything that I could share that will hopefully keep everybody hustling and driving forward, is that the future continues to change every day, and tomorrow it's going to be a different day than it is today. And as long as you stay optimistic and positive, you're going to get where you need to be. So don't let any of this hold you back. The world needs your problem solved, so solve it and reach out to the angel community and to investors and figure out how we can help get behind you at the same time. So I thank everybody for joining in today. Remember, just because Kalita posted it, that if I don't do this today, I'm going to fail tomorrow. So everybody have a fantastic day. And thank you very much again, guys, for joining in. And we'll see you guys next Monday.